this is literally how the market moves. There is no other way. Every candle, almost 98% of the candles out there, have a wick either to the downside or to the upside. Now, what if you had a way to catch a trade somewhere around here and then catch the entire move to the upside? And that is exactly what I'm about to teach you in this video. Okay, now power of 3 is fractal, meaning that you can use power of 3 on any time frames candle. So this could be the 1 hour, could be 4 hour, or could be daily candle. Okay, now this right here is an hourly candle, and this right here, this price section, is on the 1 minute time frame, and then we have the 5 minute low over here and the 5 minute high over here. Now, as I said before, you can basically trade every single 1 hour candle, but it's going to build a habit of over trading. So this is what I suggest. You can take one trade each session. So you can take one trade during Asia, one trade during London, and one trade during New York. Okay. Now, what is power of 3? Let me get this straight out the way. Okay. So power of 3 is basically accumulation, manipulation, and then distribution. Okay, this is pretty much what is power of 3. You're trying to catch a move somewhere around here. So we have accumulation, manipulation, distribution. This is power of 3. Our goal is to catch a move somewhere around here, and that's exactly what I'm about to teach you in this video to the tick. I'm going to explain everything so you will never be confused. Okay, now the problem is that the manipulation can end to the upside or to the downside, but you will never know when the manipulation phase is over. And I'm going to solve that issue once and for all. Okay, so the very first thing that you have to do is, as soon as the new 1 hour candle opens, you have to mark out the open price of that candle. So over here you can see I have the open marked out. Now within this 1 hour candle, you need to see this type of behavior. And once you have marked out the 1 hour candle open, the second step is, before going to the 1 minute, you have to go to the 5 minute time frame over here. Then you want to look to the left side, right? So over here, left side of the candle open, and mark out the most recent 5 minute high and 5 minute low. They have to be unswept. Okay, note that. And also they have to be the most recent 5 minute high and low. So over here we have the 5 minute high and the 5 minute low. Now from here onwards, what you are waiting for is for price to take out either the 5 minute low or the 5 minute high. You do not need daily bias for this. Okay, so over here, once you have marked out the 5 minute low and 5 minute high, you are then dropping down to 1 minute time frame. Now, as you can see, price accumulates, it then manipulates and takes out the 5 minute low in that case. Now, here's one more extra step that can help you a lot. Okay, and I've taught this before in my other videos as well, but make sure you implement this. It's going to improve your win rate. You don't have to use it, but it is an extra confluence that can help you very well. Okay, so notice we took out the 5 minute low. Now go back up here and identify a valid market structure shift. So we have a higher high, higher low, higher high, higher low, higher high, and then we broke this low over here. So that is a market structure shift, right? Now what you want to do is go here and choose Fibonacci retracement. Okay, and you want to use your Fibonacci from the last high that was formed to the body of the last low that was formed. So you do not want to use this on the low of the candle, but the body. I'm going to give you examples and you will understand what I'm saying. Okay, once you have done that, make sure you copy these settings, these Fibonacci settings, -2 and -2.5 and -4. Now the manipulation phase of the power of 3 is usually going to end at -2 and -2.5. But if price is also sweeping the 5 minute low and this low is within the -2 or somewhere around here, make sure it is below. The 5 minute low has to be below the -2. Okay, or it could be like this. Okay, so you have to wait for price to tap the -2. It could be here as well. So even though we have swept the 5 minute low, you wait for price to tap into the -2 and -2.5. However, if the standard deviation projections are somewhere around here, then you can avoid this, and that is like a less confluence that you're going with. but again, it's not going to be A plus. But again, if you have something like this where if you have something like this where price takes out the 5-minute low, taps into the -2, -2.5, the next step from here onwards, guys, is a market structure shift or some form of confirmation. Now, this could be inverse fair value gap, could be a breaker block entry, or something like that. So over here, you can see we have a market structure shift. So let me just pull it up like this. Bam. Okay. So we have a market structure shift. Now you want to take your entry from a fair value gap or an auto block, right? Simple as that, guys. Very simple stuff. Now what you want to do is just go for a 1 to 2 risk reward trade. So you take your entry here, you put your stop below the low, and then you can go for 1 to 2 risk reward, and that would hit your TP, right? So again, this candle, look at this 1 hour candle and look at the 1 minute time frame. So we accumulate, we manipulate, this wick area is this low that is formed, right? And then we have a market structure shift. We dip into the discount of this range, tap into a PD array. That is our entry. And then we cash the entire move to the upside. And then again, of course, vice versa for shots. I'm going to give you guys examples and you will understand what I'm trying to say. But this is pretty much how you can catch the 1 hour candle power of 3 or 4 hour candle power of 3. If you're trading the 4 hour candle power of 3, you want to mark out the 15-minute high and lows. Okay, and your entry could be either on the 5-minute or I would say 3-minute time frame. You do not want to trade on the 1 minute if you're catching the 4 hour power of 3. One more extra thing that I would say is that for Asia session, try to look for power of 3 for the 8 p.m. candle. For London session, try to catch the 4 a.m. candle power of 3, and for New York, try to catch the 7 a.m. candle power of 3, or basically 8 a.m. My bad, 8 a.m. candle power of 3 for gold. Now this is CFD, okay? This is XAU USD, but it works for futures as well. So you can trade it with NQ, you can trade with gold futures. It doesn't matter. It basically works with everything if you understand what I'm teaching you right here. Now that we have understood the strategy, let me give you guys some examples, and that is going to clear out each and everything. Trust me, keep watching till the end. All right, everyone, here is example number 1. I'm looking at gold on the 1 hour time frame, and we had this 8 a.m. candle. So let's study what happened with this candle. Okay, so let's mark out the opening price and study what happened. So first thing first, what I would do after marking the opening price, as soon as the candle opens, I'm going to go to the 5-minute time frame, and I'm going to mark out the most recent high and most recent low to the left side of the open. So we have a high over here, and we have a low, unswept low over here. Okay, now notice as soon as we opened, we swept that 5-minute high. So after I see that price has swept this 5-minute high, I'm going to drop down to 1-minute time frame. Okay, now after I have dropped to 1-minute time frame, I'm going to look for a very clean market structure shift level. So over here you can see that we swept this low, and then we had a market structure shift around this area. So what we can do is use our Fibonacci projections like this, or what you could have done is also took notice of this level over here, and you can of course used it as well. Okay, but again, this looks much cleaner. So now you can see that I'm using it with the wick, but you can use it with the body as well. Now, as long as price is somewhere around here, you're good to go. You're all right. Okay. The thing is that it should be at the -2 or above, not below. So you cannot look for entries if price is below the -2, okay? So you can also, again, use it with the high. The point here is, guys, that you have to make the -2 and -2.5 align as perfectly as you can with the liquidity sweep, okay? So over here, we have liquidity sweep. We are tapping perfectly into it, right? And then what you have to do is look for your confirmation. So first confirmation is that we have this fair value gap over here, and that got inversed. The second confirmation is that we have a lower low, right? And then we broke this low over here, and then we formed a fair value gap, a tiny fair value gap around this area. So now this could have been your entry if you didn't take the inversion. You could have taken this inversion here as well, this small fair value gap. So let's say this is your entry. You put your stop above the high over here, and then you pretty much just go for 1 to 2 risk reward ratio. Simple as that, guys. Really simple. All right, here is example number 2, and this is an A setup, so it is not A plus, but it could be A plus. I'm gonna show you in a moment, okay? But we're gonna study the 2 a.m. candle. This is during Asia. So we mark out the opening price. So let's see what happened exactly within this candle. So after you mark out the candle open, go to 5-minute time frame, right? And then this is the open. So look to the left side and see, can you identify a high and low? The most recent high and low. If you can, well done. We have the most recent high and we have the most recent low. Now let's drop down to 1-minute time frame. Again, you can see we have accumulation, we have manipulation, and then we have distribution. Okay, so after price swept out that high, you are looking for a what? A market structure shift, guys. After you have a market structure shift, what you're doing is taking your entry from what? A fair value gap, right? So you're taking your entry right here. You are putting your stop above the high, and what you can do in some cases is use your standard deviation projections for take profit levels as well. So same from the last high to the last low. Actually, let's do it with the body here. And then you can do that as well. Okay. Now, a lot of people ask me, Faz, you told me that use your standard deviation to the body. The thing is, guys, you want to try your best to align the -2 and -2.5 with your draw on liquidity. So we have this low over here. So if I put it over here, you can see that it is aligning perfectly with -2 and -2.5. However, if I use, in this case, the -2 is above the liquidity level, okay? So this could not be the real projection. I can tell you to use just by the wick, but you have to use some logic here, okay? There's no other way to use standard deviation. You have to put some logic. Okay, if I'm using my standard deviation to the body of this candle, and if the -2 is aligning perfectly with this low, okay, then this might be the real projection. But if you use it like this, right, like this, it is now much better. It is perfectly aligning almost in the middle of the -2 and -2.5. Also, key thing, the manipulation phase can also sometimes end at -4. So now the manipulation ended over here. So you can see that let's mark out the most significant market structure shift. So you can see that we swept this low, and let's use standard deviation projection from this low to this high. And guys, you can clearly see that the -2 is way far up. Okay, so as I explained before, if it is way far up, you can take a setup. Okay, so but notice on the fractal time basis, and I wouldn't suggest you do it. Okay, you can see that we have this up move and down move. So on the 30 seconds time frame, you might have what I call the market structure shift. Okay, and you can see it is aligning perfectly with -2. So a quality setup, but it worked out perfectly. At the end of the day, it is accumulation, manipulation, distribution. Let's move on to the next example. Okay, guys, so here's the final example, and this is a plus setup. So over here, you can see is that we have the 8 a.m. candle. So we have marked out the opening price. Also, what you can do is add some extra confluence, and that is SMT divergence. So I'm going to show you what you can do, but it's not necessary. Again, I'm here to make your model be high win rate. I can give you like a basic version of the strategy, but no, I want to give you the full information. Okay, so over here we have the candle. We mark out the open. Let's drop down to 5-minute time frame and see what exactly happened. So this is the open, right? Now look to the left side. If you notice this low, it was swept before the new candle open, the new hourly candle open. So this low is not valid. So we have this low over here, and we have the most recent high over here. Simple, right? Now let's drop down to 1-minute time frame. So this is the open, right? And here we have a very clear market structure shift: lower low, lower high, lower low. So let's use our standard deviation projections from the last low to the last high in this example. If you use it with the body, you can see it's not perfectly aligning with this pool of liquidity, this 5-minute high. So if I use it like this, now it is aligning perfectly, okay? So you get the point, right? Now we sweep, and then we look for a market structure shift or an inversion, right? So over here we have inversion. We also have a fractal market structure shift, which is valid, completely valid, right? We broke this low. You could have taken your entry here, or you could have taken this inverse fair value gap entry. So let's take our entry here. Stop goes above the high, and pretty much you can basically target this low over here, the London low, right? Let's see for the target projections if it hit the -2. It hit the -2 perfectly. I'm not sure if it hit it if we use it with the wick, but again, this was our pool of liquidity, right? So if I use it with the body, you can see it is aligning perfectly when I do like that. So now this could be the real target level. I hope you guys understood what I'm trying to teach you. It is a bit complicated if you are starting out as a beginner, but once you practice a lot, you guys will be able to catch power of 3 moves with ease. And again, it works on all time frame candles. You can use the 4-hour power of 3, the daily power of 3, doesn't matter. But if you want scalps and you want quick trades, 1 hour is your friend. Please subscribe. Let's get to 200K subscribers by the end of this year, hopefully, and I'll see you guys in the next one.